not often that you find a large real estate entity out of India at the cold shores of Davos. Okay, maybe not shores, but the cold hills of Davos, and that's what we have today. We're speaking to Mr. Manoj Menda of RMZ Corporation on their view of what they're gauging the interest in India right here at the WEF, and how is it that they envisage the movement of the sector in India over the course of the remainder of this decade. Mr. Menda, great having you. Thanks for taking the time out.
Thank you, Niraj.
In some sense, you would be a happy corporation because everybody unanimously believes that we're in the midst or at the beginning of a longer term real estate cycle which has come after a really long time. Is that your belief as well?
Absolutely. I think the first belief is India, right? I think we're all benefiting from the leadership in India today, right? I mean, it's thanks to the leadership that's put India out in the map, and I think it's now our fiduciary responsibility to grow that belief that we have in India. We speak about rebuilding trust, right? The government has done that for us, and now as an industry, we have to step up to it, right? So if I look ahead, from 2024 and beyond, India is going to be probably the most promising real estate market globally. Right? If you look at 2023, two markets outperformed itself. The Middle East, parts of the Middle East, more in terms of residential, and India as a whole, across all the asset classes in real estate, India outperformed. So we've had these two markets that have been outliers in terms of performance, vis-a-vis the West that's been crying out loud about a possible distress in the commercial real estate markets. So I think if we look at 2024 and beyond, it's India's story.
You gauge some of that out here because I did, but I'm just trying to understand what you thought of the few conversations that you would have had at the WEF this time around.
I think we have had many conversations, right?
Of course.
And again, if you look at the dry powder that's there today in real estate around the world, there's $400 billion of dry powder waiting to be invested. Right now, how much has India absorbed last year? We absorbed about $5.5 billion. So it's only a small sliver of the available dry powder that can potentially come into India. And what's worked in our favor is also the domestic capital markets, right? They've outperformed themselves. And I think there's a lot of liquidity available onshore, apart from the dry powder that you see coming in. So that's one area of interest that a lot of international investors have, is they want to try and find avenues to bring in their dry powder into India. And what we're seeing now is how do we build resilience, right, in our buildings. So if you look at today, if you went out in Europe today, there's a lot of legislation to say that buildings that have a vintage of 20 years plus are going to be possibly redundant. 1/3 of Manhattan is possibly going to get redundant because they're not compliant. But to our good fortune, the industry in India has responded very well. So compliance to building green buildings has been on the mind share of every person in the built environment, right? And I think it's a role now of the Indian real estate developer to transform the built environment in India. We have a great opportunity for transformation.
Interesting. Well, you have to admit that buildings in India and a lot of metros at least have come of age. I mean, they're comparable to almost any or better than most global buildings that we will see as well. I would love to understand, how do you see the remainder of this cycle, be it 5 years, be it 7 years, or be it hopefully even longer? Would it be dominated by a mix of both residential and commercial? Because 2023 certainly saw, even Q4, we got this Collier's note which spoke about how global capability centers have really expanded their presence into India and mopped up commercial properties as well. So how do you see this mix going ahead?
Niraj, if you look at today, India versus what you looked at India maybe 20 years ago. If you invested and you were a financial investor that came into India, you had a choice of investing in residential or residential. There were no other options available, right? At that point in time, the doors were shut. We didn't have foreign direct investment in India. But over the last 20 years, the two asset classes that have benefited have been in commercial real estate, which is office, and residential in India. Office today is about a 350 million square feet market for grade A. What is 350 million? It's very small, right? If you look at Manhattan alone, it's over 500 million square feet, just one borough of New York, versus India, grade A stock is 350. And that's growing by about 50 million square feet every year, right? You spoke about the global capability centers. We have about 1,600 of them operating today in India, and that's growing. That's the highest absorption comes from them. So what used to be back office processing, as we would call it, BPO in those, is today knowledge centers.
Exactly.
Right? India is actually going to be leading. It has been and will continue to lead in the services economy. Now, this would naturally have a positive impact on commercial real estate. Move ahead to residential. India does about 500,000 units a year, compared to China, which does maybe 30 times more, right? India's contribution to GDP is 7% in real estate versus 30% in China. So if you look at just these two parameters, contribution to GDP in India versus in China, contribution to GDP is 30%. Absorption is 500,000 units in India, whereas there it's about 15 million units a year. So that's the huge upside that you're going to see in residential. And there's a short supply of residential in India. And then we have a great population growth that needs housing. Everybody wants housing in India.
Yeah.
You look at some of the other asset classes that have dominated and will continue to dominate: industrial and logistics. We saw the e-commerce boom. We see supply chain opportunities growing. So industrial and logistics is going to, with manufacturing also now, India benefiting from manufacturing, we're going to see a lot of growth in industrial and logistics. It's a very, very small segment today. And then there are other thematic investments and thematic asset classes which are beginning to come in, like life sciences. We haven't got something called multifamily as yet. Multifamily is today the biggest asset class in the West. We don't have that in India. So I think that's another asset class that's possibly going to get started in India, and we're all going to benefit. All we have is single family condominiums that we sell, but we don't have multifamily residential for letting out in India, which is a huge opportunity. Apart from that, there are other opportunities to do retail. There are other opportunities to do healthcare, hospitality. I mean, look at hospitality in India, right? It's $100 to $150 ARR. Compared to anywhere else in the world for that quality of service and product, you'd probably be paying $500 to $700. So that's, again, a huge opportunity for us to cash in on in India.
Yeah, but surely we're not talking about going down the China route when it comes to the property market, right? Because we know what happens as a result of the excess development that's happened there. But what you're trying to say is that the headroom for growth, even if we don't go the whole hog, is still very high relative to where we are right now.
I think, Niraj, let's understand what went wrong in China and what hasn't gone wrong in India is the financial system, right? The discipline and the financial governance that we have in India, which is imposed by the Ministry of Finance, is amazing, right? It doesn't let us, out leverage the asset. I think what's possibly gone wrong in China and in many other parts of the world is excessive leverage, right? So in India, we don't have that issue.
Okay.
There's a fair amount of discipline amongst every single developer in the built environment to say we need to make sure that our leverages are under checks. So I think leverage has played a key role in possibly damaging the Chinese real estate industry, and now is impacting the Western world as well. The CMBS markets that we see that are coming up for renewals, a couple of $1 trillion, we don't see that in India. Okay. Right? So I think from a leverage perspective, we stand to gain in India.
Point well noted. My final point, and that is dwelling on a number that you mentioned about the dry powder waiting versus what's coming. Now, I would love to understand, because you told me before this interaction about how you think about your own assets, not just the next 3 to 5 years, but longer term. We've seen that in capital markets, that the FI flows have been very strong, never mind what happens in 1 year, and now DI flows are also strong. But in real estate, do you anticipate global financial institutions to make an even larger investment into physical real estate, be it commercial or residential as the case may be, or projects as the case may be, really picking up 2024 and beyond?
Absolutely, Niraj. I mean, if you today look at India's REIT market, right? The India REIT market is 0.2% of India's GDP, right? If you look at it in Australia and in Singapore, they're anywhere between 13 to 30%, right? So the REIT market has not grown as yet in India. So that's a huge opportunity for FIs to come in and invest in. If they want liquidity in their investments, the REIT market's the best platform for them to invest in. So I think if you just take every asset class that's available in India, right, you can, the risks are different, right? You do not want to take too much risk. You want liquidity, then invest into the public markets. You want to take development risk and enjoy the upside of development because the development yields in India are still the richest in the world. If you went in and invested $1 of capital in today London, your development yields are maybe 5 to 6%. You invested that same dollar in India, your development yields are between 10 to 12%. Right? Today, the opportunities for development, whether you decide to make an investment in office, in residential, again, residential has a 3 to 5 year horizon, office may have a 7 to 10 year horizon, industrial may have a shorter horizon.
Sure.
So I think there are a lot of opportunities today for FIs to come and invest a part of that $400 billion, which is waiting on the sidelines, based on their risk appetite, based on the events of liquidity. And I think if you look at, and I come back to the theme at Davos, which is about rebuilding trust, that's something that we all need to do, right? We have a fiduciary responsibility. We're custodians of capital, whether it's for the retail investor or for the financial investor. And I think as long as an industry, we actually act upon that, right? And our voice needs to be heard, because at the end of the day, we are contributors to the GDP, right? Real estate in many which ways does solve a lot of problems, right? It doesn't create problems, but it does solve a lot of problems. But in order to do that, we have to be good custodians of the capital. And as long as we can do that, show financial governance, I think the capital that's available out there from the current 5.5 billion could easily double and beyond. So I think it's very positive to invest in India. India as an economy is doing very well. The leadership is fantastic. The industry is growing. And I think we as an industry need to elevate our voice, and we need to be greater custodians of capital.
Lovely talking to you, Mr. Menda. It's the first time that we have you on NDTV Profit, but certainly hoping it's not the last. Thanks for being with us today.
Thank you, Niraj. It's always a pleasure to have a conversation with you, and we look forward to engaging in Davos or on the shores of India.
Yep, most certainly. And
Thank you.
Thanks for tuning in.
Thank you.